The realty space is one to watch because there is a little bit of a divergent trend that is coming through. A recent report by JLL Research points towards a dip in residential sales, and this is despite new entrants like DLF in Mumbai and reports of luxury sales going through the roof, prices as well going through the roof in certain circles. What's happening and what are some of the key concerns? Anushi joining in with all of those details. Anushi?
Well, thanks for that, Alex. So, as you pointed out, we are just doing a reality check of realty, and this is on the basis of this increasing price realizations that we are looking at over the course of these years, which has also led to a decline in terms of how the volumes are fared out. In fact, if you look at the first half across the top 7 cities, what we are seeing is a dip in sales volume, and this is in double digits that we are seeing. Bengaluru, Delhi NCR leading the charts, so we are seeing a 15% of a dip. In fact, even in MMR, that's a key region that we are watching out for, has also seen about a 15% of a downtick in terms of how the sales volume have been. Kolkata also seeing a 29% of a dip. So this is a culmination of various factors that we are looking at, and what has led to this sales volume dip is something that we should be watching out for. Firstly, rising prices are affecting the demand, particularly what we have seen in the NCR and the Bangalore regions. Other than that, we are also looking at higher construction costs across the industry, which is also squeezing the margins in terms of how the launches are also accelerating going forward. Now, there have been fewer launches also as well as considered by the big developers that we are looking at, and this is also due to some of that inventory build-up concerns on basis of these higher price realizations that we are looking at. So, in fact, if we see just the ticket sizes, 2 to 5 crore of ticket sizes have seen about increase in 52% of unsold inventories, and this is as of the first half of 2025 that we are looking at. So these are some of the key concerns emerging. But other than that, let's also take a check of the pricing growth. Now, as we emphasized earlier, that pricing growth is somewhat a concern going forward. In fact, in NCR and Bangalore, we have seen about a 14% of increase in terms of how pricing has been, because of which even the unsold inventories in these particular regions have increased. In fact, if we look at Mumbai also, we are seeing at an 8% of an uptick, Hyderabad 11%. So now the overall industry believes that these double-digit growth in terms of how pricing has been will narrow down to a single digit of growth that we are looking at. So with this pricing growth, we should also look at how unsold inventories are in contact with this. So if we look at high ticket segments in H1 of FY25, we have seen a significant uptick in terms of unsold inventories. While in the earlier quarters, we did point out that unsold inventory levels have remained at quarters low. In the first half, that is not a scenario that we should be watching out for. In fact, if you look at 2 to 5 crore of ticket sizes, 52% of an uptick. Even in the luxury segments, 20 to 50 crore, we are looking at a 37% of a rise in terms of how the unsold inventories are seeing. So what does these unsold inventories increasing indicate? Firstly, it shows that supply levels are now increasing compared to the sales velocity which is there. This also points out that market may be at cusp of a correction going forward in terms of how launches would be, and even the buyer sentiment, if you look at, will continue to remain conservative on basis of this. Quickly walking through how real estate companies' volume have fared out, we are seeing a decrease in terms of south-based players as well. In fact, even in the NCR regions and MMR regions that we are looking at. So this is the overall picture that we are building out for how the first quarter results have also fared out for the companies.